Hello everyone and welcome once again to the weekend review and look ahead. I am Will Hassel as always, and gonna start off like we always do with our charts of the Dow Industrial Average, the spider for the S&P, the and the power shares for the Nasdaq and the VIX. Had a mixed week in trading this week, although we did make all-time highs this week. It was kind of an interesting week because we had Q1 GDP come out on Thursday, and it was at a spot 1% increase from last time, which was an atrocious number, but we closed on all-time highs on that day. And on Friday, we got a better than expected jobs number, but then ended on lows pretty much for that day. Had a big gap up on Monday. As we see, the Dow Jones did close below its 50 and 21 day moving averages. So that's kind of the news that we had coming out this week. It was kind of interesting that we did go and see all-time highs this week. We've always kind of been near all-time highs, about 1% back we were, but it's just this year's been so volatile that we forget, that we're at all-time highs. And here's the S&P, just did a little bit better than the Dow Jones in terms of where its simple moving averages are at. It closed at, so it is just below that 50-day moving average and 21-day moving average as well. Nasdaq, which saw some interesting action this week with some of the tech earnings, did close above its 50 and above its 21 day. And now to bring up a chart of the VIX volatility index, which got absolutely crushed this week. We came in on Monday from Ukraine fears. That's kind of why we sold off on Monday. And then ever since then, you just saw a lot of selling in the VIX. A lot of people that didn't want to be long those VIX calls, those VIX futures. So we saw a lot of VIX selling, and now we are under 13, which I don't think we've been under 13 in a while, if I remember right. Let's just go to the 3 months. So basically this, year-to-date chart. And like I said here, look, here's that $13 level. We've hit it back in April 14th, again April 22nd, and now March 2nd. So, and if we bring this chart out a little bit longer, let's do 6 months. We gotta notice that 12 is normally a number that is often used as support for the VIX. As we see here, a lot of consolidation near 12, especially into December and January. But now, since this year's been so volatile, we see that 13 is more along the lines of support. So if we see 13 break, and I know it does say 12, 19, but if we see multiple days below 13, our next level of support is 12 for the VIX. And then after that, who knows where it will go. But normally 13 and 12 are numbers that I really watch. I love seeing it in this 13 to 12 range. That means there's not a whole lot of bad stuff going on in the market. It means that there are more calls than puts going out there in the market. Going into some of the events that are happening this week. On Monday, we have the April ISM non-manufacturing index as expected to be up 54 from the previous reading of 53.1. So that's pretty much all. We have a lot of different finance ministers meeting. Eurozone, the European Commission will deliver its spring economic forecast on Monday. On Tuesday, we have the continuation of the EU finance ministers meeting. We have the March international trade data is expected to be at negative 40.5 billion as opposed to last period of negative 39.0 billion. Also on that day, there's going to be some Fed talk, not necessarily big Fed talk. I mean, Fed governors talking. So you may go and see a little bit of market reaction going on there. Kind of like how we see Yellen. It kind of get picked up on Yellen. It's just a little thing to keep your eyes out for. Wednesday and Thursday are going to be our big days for the week. Not a whole lot of data coming out on Friday. On Wednesday, kind of big international news. Bank of England holds a monetary policy meeting through May 8th, so that's through Thursday. Thursday, like I said, big day for numbers. On Wednesday, we have Q1 productivity, and the consensus estimate is negative spot 9% versus the last period of spot 2%. We have March consumer credit. We are looking for 15 billion as opposed to the last period of 15 billion. So looking for unchanged on March consumer credit numbers. And also on Wednesday, just a thing to go and keep your eye on. I know I don't normally highlight earnings unless it's my own, but Tesla earnings are going to be on Wednesday. Sorry, I was reading the little alert that came up on my computer screen. Are going to be on Wednesday. Tesla's been interesting. A lot of the Momo names, including Tesla, have been gotten hit today. We've been on light volume ever since for a while now. So maybe if we see Tesla beat on earnings and go up higher, maybe we see a little bit of volume come back into the markets and come back to some of those Momo names, help us reach even more 52 week highs. Maybe we don't. Maybe Tesla misses on earnings, and that's one of the triggers to cause another big sell-off in Momo names. I think it'll all depend on what happens. Thursday's a big day. Thursday, we have weekly jobless claims expected to fall to 327,000. We have the ECB making its interest rate announcement. And it will hold a press conference following that announcement. And we also have the Bank of England announcing its interest rate announcements. Now, we have had some talk about what exactly is going to happen, what may not happen in terms of interest rate policies over there for at least the Eurozone. There's been talks about QE, so maybe we'll get a little bit and even possible negative interest rates. So it's going to be a good thing to go and keep an eye out over there. And then the last thing is on Friday we have March wholesale inventories, and we're looking for spot 5% as opposed to last year spot 3%. Okay, now that we've gone over the news, time to look into my positions. Now, I did add a new position, so I'll cover that one last. Going in with hedge, just to start off, I am no longer. I know everyone's used to me. I know everyone's used to me saying, I've already covered QQQ, but I am no longer long QQQ. Yes, I have to say, after my multiple year holdings, it's one of the first things I actually bought. Believe it or not. I have sold completely out of all my QQQ, and as you can see over here on positions, I'm now in the XLU. Hedge kind of topped out. It was above 13. Now it's below 13. Kind of like the VIX almost. Just because we had a large selling on Monday, then it kind of kept dropping down. Oh, I must have hit something. And it kept dropping down. Closed below that 21. Closed below actually all of its simple moving averages. Yeah, closed below all of its simple moving averages. Gonna go to JPM. Not too much word except for Bank of America, which I will cover here shortly. Closed just slightly above that 200-day simple moving day average. This name has continued to get hammered ever since its poor earnings that it announced. Gonna go into Visa, which has been getting propped up lately. I have to say, I was getting really nervous because on Monday it did actually. Here, I'll bring this onto a 10-day chart. We saw it drop we saw that sharp drop after earnings, and then it was banging around 200, and it held 200 like a champion. And then once it went and held 200, it continued higher throughout the 5 days. Oh, I don't want 1 hour. I want 30 minutes. That's why the chart was looking weird. We can see some big volume going in and buying on that kind of, those lows of 199, and then it held 200. It held it, and then that just kind of brought in a new wave of buyers, and it continued to go up throughout the week. So I am still holding Visa here for the short time. Gonna look to see, still want to see how it reacts. 200 is that big, massive support level for that, so just keep that in mind. Let's go with Starbucks. Rolling out Oprah Chai. They are now rolling out Tivana brands in their stores now. Hit 70 and then bounced back above it. This name came off of earnings that people didn't necessarily like, but it's still just kind of chopping around. Kind of probably be looking for the continuation of consumer sentiment, consumer credit numbers, stuff, any type of consumer names to pick up, and you'll see Starbucks pick up. But right now it's still pretty choppy. Looking for 70 being our support and resistance. Man, I'm gonna have to go back a while to find resistance. Looks like that kind of what was that high? 170, 72, 75 level looks close to kind of, yeah. When I start looking at it, looks like resistance. So you have a trading range to go and trade Starbucks off of. Going back to Under Armour. This one actually made a stellar comeback from the trough that it was in from a while ago when it reported its earnings. If I remember right, it is up 20%. Yeah, right there. It's up almost 20% since those lows. Got near the 200-day moving average and then popped back up. I am looking for this name to cross above 50. It did earlier in the week, just slightly didn't close above it. I want to see it close above 50, and then we can start seeing it move another leg higher. And it is starting to track in line with that 50-day moving average. If you look right here on Friday, it did bounce off of that 50-day moving average. So, or the moving monkeys, as Keith McCullough calls them. So we are looking for that to continue as well. Going on into probably one of the best performers that I had this week, Michael Kors. Really stellar action out of Michael Kors. It's starting to look like it wants 95 and it wants it bad, which it hasn't claimed ever since the Momo sell-off a while ago. As we can see here, about $96 is where your resistance is, because that little top right there, you can just cut across that, and then almost basically a triple bottom right there above the gap for Michael Kors. I don't mean the gap, I mean that earnings gap that it had after its first quarter numbers. There was a lot of talk about gap filling, but no, basically put in a triple bottom right at right at around $85, $85.50, and then just held it strong, and it looks like it wants to continue going up. If it can cross above that, $96 mark, like I said, I think we can keep seeing this continue to move. And then when it reports earnings, the end of this month, I think we can see another leg higher, because I do think Michael Kors is going to go and put pretty nice earnings beat out there. Investors Business Daily had a piece about saying how it's the strongest looking name in the entire retail sector. I mean, we have Ralph Lauren reporting on Friday, and we had Coach report earlier this week. And let me tell you, it was on Monday. We saw a lot of buying. That's what all this buying was, off of those those terrible Coach numbers that we saw. Because basically what Coach said when it said, it was losing market share was, we're giving it to Michael Kors and we're also giving it to Kate Spade. Michael Kors also had a number of Janney Investments did initiate a buy rating with the price target of 121. It reiterated that price move on the 30th. Sorry, I was looking at FinZip, which is another great. So that was what the move was on Wednesday. Higher was off of that initial, reiteration of the price target. But no, Michael Kors is one of my favorite stocks that I have on right now. Gotta love it. Gonna go into AIG here. They report earnings actually on Monday, and it's the ramp going into earnings has actually gone on a lot longer than I initially thought it would. I'm going to take you back off to a 3-month chart. That way we can go and see. Here's the drop from it originally. Here, I'll even display earnings for you. So here's those earnings. When it ramped up, hit it, kind of dropped down, did nothing really. And then we're coming up into earnings here on Monday. It's kind of got a big ramp up going here, and then this kind of candlestick hanging down. I was actually surprised that it went down, really. A lot of sentiment as I look on StockTwits on my on my desktop. A lot of sentiment is really bullish right now, and it normally gets really bullish right above earnings. There's been a lot of volume coming in and a lot of excitement about this name, I have to say. So, I mean, maybe we have to go and keep watching this. It's been a name that I've kind of been highlighting in my videos, just saying, watch this out. I said there was going to be a ramp up into earnings. There almost always is, and, here's the ramp up into earnings. So, you got to watch earnings very carefully. I've kind of been in this, been chopping around. I am in profit on the name. I'm about $22, as you can see over here. But I've been kind of collecting the dividends and stuff like that as they've been going, and they are expanding their dividend. But it's going to be interesting to see how earnings come out. Now coming into what I added on, XLU. Here I'll even go into I'm going to go into messages, so I can go and say, look, I bought it 42.98 on Friday was when I bought it. I bought it because I needed some of the funds to clear. So 42.98, as you can see, I bought it right there, and I thought that was where the bottom was. It looked kind of like it kind of looked right where the bottom was. I expected it to actually perform much higher than it did, but I think since this name has been doing so well, and a lot of people have been moving into it, that's why we had this kind of. And I actually really like the look of this chart, especially with that Friday candle hitting right at that 21-day moving average. It looks like it's just going to get bought up. I mean, look at this candle that went down. Then we had it keep going higher. Another candle come down even higher. And this thing, I really like it because what I'm doing is I decided to take off some of my risk that I didn't really need. I couldn't really stand having the NASDAQ. Even though I did have a lot of gains in there, I couldn't stand the volatility, and I much rather like the XLU. Why do I like it? I like it because I'm kind of taking on some of the hedge eye mantra of inflation is accelerating. You can't deny that it isn't, especially on food. Food prices have been skyrocketing. So what do you do when you have to fight inflation? You have to go and buy the slow growth, yield providers, and that's what XLU is. It does have an awesome dividend to it. Don't know why. Oh, here we go. I'll just do overview. I'm gonna go and show you the dividend. Oh, it's all the Lipper stuff. I mean, there is no surprise in the fact that throughout this volatility, a lot of you know what, I'll go and read it off of, I'll just look it up on since I haven't really dealt with the whole Lipper stuff on Trade Monster because I am still relatively new to it. I'll just look it up on cnbc.com on my desktop what the dividend yield is. I mean, okay, dividend yield of $1.47 or 3.64%, and year to date it's up 3.7%. Not bad for utilities, aka the slow growth sector of the markets. And I really do like being long this name, especially since I think volatility is going to keep edging higher, especially if we get some of these mixed numbers like we've been seeing. I mean, I am overall a market bull, as you guys know. And when you look at my portfolio breakdown, yes, I am fully transparent. That's why you get to go and see, oh, my live account value, oh, how much I have in cash. Ooh, I didn't make too much money that day. That's kind of, yeah. No, that's month to date market gain. I mean, it's only been 2 days. So when you look at my total asset values, I have a big chunk in cores. I have, basically, I have another 30%. So about 50% of my name is large kind of Momo almost names. I'd say high PE names, really. So 50% of my portfolio is that. Then I have another about 21% being in financials, and then the rest of it, XLU, so basically 25% of it is basically a hedge against it. That's why I have XLU, because I was way too overweight Momo, and the entire time when I had these stocks on during the Momo crash, I wanted to trade out of it. I wanted to get into the XLU. I wanted to get into CIM, Chimera Investment Corp, because I didn't like having all that whiplash. And I think the XLU is a great place to be if you think you're going to see further volatility this year in trading. And that's why I got into it. Okay, going into some of the names that really got some attention this week, like Bank of America. My God. I mean, seriously. Like, can we talk about this for, a brief second? Sorry to sound, so teenagery, but this drop was just, oh my God, murderous. I mean, an accounting error, really. An accounting error from one of the nation's largest banks. That's scary to me. I have to say, that is scary. Some of the guys in the Leaders Investment Club did like this as an opportunity, and I went and I had to go out and say, I went out and I said, I've dealt with this type of situation before, back when I first got into JP Morgan, and this is kind of my trade for the week. Almost my trade for the next couple months maybe, was they were talking about getting into Bank of America, and I said, I've had experience with, going into and trying to call bottoms on it, basically. And One of the things that I did was about $36. I got in the first part of my position. It went down to about 33, and then that's really when I put on the rest of it. So my net was like $35 or something like that, or it's $36. I forget which one. I think like it bottomed and then I bought a little bit more. But I kind of suggested, and what I suggest to you guys when we're looking at Bank of America and how to trade it is, it's okay that you missed it going to the low of 1486. That's fine, because when you look at it, it's basically done nothing since then. I think if it definitely goes to 15, you load up. If not, I think actually right here is a good place to load up maybe a small amount, initiate the position. Maybe it's a fifth, a sixth of what the total, whether it's the amount of money that you want to put into the stock, or if it's the total share count. Put a sixth, put a fifth in right now. That way you can get, at least if it starts ramping up, you can get a little piece of it. If not, if it goes down, so what? It's just a little piece, and you can always add more. Bank of America is a pretty good bank, but the accounting error is really, really scary. The fact that they just completely missed it really, really scares me. Now, that being said, I think probably their best asset is Merrill Lynch, which is their which they acquired back in the financial crisis. I've said this over and over again. It's all asset management for Merrill Lynch, which is great. I mean, look at Morgan Stanley's numbers. We all know that asset management and financial advisory is where all the money is, and it's a continued stream of revenue, and it's basically, what the growth of the financial industry is, because more people are going to have money. People are going to want to go and put their money away, and they want financial advisors to do that. Yes, that's all good. So if you're in it pretty much for Merrill, that's what I say, buy Bank of America. Final thing that I'm just going to go and touch on, Tesla, just to go and get you guys prepared for these earnings. Let's look at a 6-month chart. Let's display these earnings, and let's show you, what happens. So here's earnings, went all the way up, then we had it get just pretty much topped and got slammed on the way down. We started getting into the Momo crisis, and now it's pretty much let up here, 210. Basically, if you're hoping that it'll get to 260, I'd like to just say pretty much fat chance. Although, it was right around these levels when it hit 260. Maybe you will get up to 260. I don't think it'll break and make all-time highs unless it's a monstrous beat. It is way above the 200-day moving average. It's just barely touching on that 21-day. It's below the 50 on the 6-month chart. Looking at the 3-month chart now. Here we go. Same thing. I say be careful here. Use tight stop losses. And, I honestly think Tesla will probably go and pave the way for how the Momos will react through these next couple of weeks. And with that, I'm going to have to go and stop the video here, end it. I'm going to wrap up by thanking all you guys, as I normally do, for watching these videos, for going on my blog. If you have any questions, please tweet me. Please, send me an email. I'm more than happy to go and answer them, as some of my followers often do go and comment to me and go and, say things to me they know. And I'm sure you guys have gone and said, that I go and I do talk back to you guys. I love answering questions. I will almost always reply. If not, I'll favorite if you go and you say something like oh, Under Armour had a great day and stuff like that. But I always reply to you guys. I love getting questions. I honestly do. So yeah, make sure to follow all the other Leaders Investment guys. If it wasn't for them discussing the Bank of America move, I probably wouldn't even had it up here, just because Bank of America isn't something that I normally look at. happy trading onto these next couple of weeks, and I'll see you next time.